Hi, and welcome to this episode of OmniTalk. Today, we are talking about a very fundamental growth factor, which we think is at a very exciting stage from an investment viewpoint. So, Vikas, this particular growth factor, I think it is very fundamental to a lot of other exciting things that are happening in India, starting from, Atmanirbharta, Made in India, or manufacturing focus, industrial focus, logistics, everything, right? So there's a common element across a lot of economic activity, which is power, right?
True.
And I believe that this is still, not completely identified by Mr. Market in terms of what is the growth potential lies here. What are the strength of companies, which are like kind of monopolies that we have in this particular sector. So, in terms of the broader growth outlook, how do you see power shaping up in the next decade?
See, the base case is that whatever is the economy has to be powered by power, so to say,
Yes,
right?
absolutely.
So if economy itself has to grow at 7 to 8.5% real GDP growth rate,
Right.
plus let's say like a 4% inflation, so that is somewhere around 11 to 14%, right?
True. True.
Range nominal growth rate. So that's the kind of nominal growth rate of power demand. Now that is in rupee terms,
Right.
right?
True.
Of course, when you talk about the volume of or the units of power, that should grow in line with the real GDP.
True.
So 7.5 to eight and a
Eight.
half percent.
Right.
That's the base case again.
Correct.
Now we also have to keep in mind that we are underpowered,
Hmm.
so to say. That Indian economy is growing on back of lesser power than the developed economies,
Correct.
right? So per capita consumption in India
Hmm.
is much lower.
True.
Now, if you as you develop and as you grow, you have to get in line with the per capita power consumption in the developed markets.
True.
So, in that sense, the total consumption of power has to grow slightly faster than the economy
Okay.
in terms of volumes.
Right. Yeah, so in just to like put that in few numbers, I think we are currently at around 1500 or 1600 terawatt hours of consumption.
Mhm.
We expect like government, some old government estimates are around 2500 terawatt hour by 2030. Our expectation is that we will need around 3000 terawatt hour by 2030,
Mhm.
which translates to roughly a 10% kind of a annualized growth in the volume terms,
Yeah,
right?
makes sense. Yeah,
Which is, as you said, in line with the what are expectation on the GDP real growth
right.
rates at
Plus
that.
little bit more.
Plus little bit more because,
True.
as you said, that per capita is significantly low. We are at around 1200 units per person per year, while the global average itself is 3600 units per year per person. For developed world, it is significantly higher, right?
Mhm.
So we are at a global, like a one third of a global average. Even at 3000 terawatt hour, or what we expect India to consume by, let's say, 2030, the per capita consumption will still be just about 2000 units,
Which is way below global
way
average.
below today's global average, right?
Sure.
So I think the basic math itself, like not considering anything else, which I think I'll come back to, there is a strong double digit volume growth scenario. I think that's what we
Absolutely.
are seeing,
Absolutely.
right? So, other than the Make in India focus, which will need much more power, which is not happening right now. So it's all greenfield opportunities for the consumption that we are seeing. So the whole export initiative, or so there also, if just I talk about numbers, we have a target to export goods and services worth $2 trillion by
Mhm.
2030,
Right.
which right now we are doing something around like 800 odd billion dollars.
Right.
That itself translates to nearly 15% growth,
Sure.
of exports of goods
Mhm.
and service in next, let's say, 7 years or so, right? So to support that, you need basic power, right, to
Absolutely.
manufacture
Absolutely.
and things like that. uh, but there are two other interesting greenfield growth
Mhm.
sub vectors that we wanted to talk about. One is on the EV side,
Correct.
and the other is on the data center. Let's
Right.
talk about the EV opportunity first.
Right.
Yeah.
So we know the government norm that 30% of the vehicles sold, passenger vehicles sold by 2030 have to be electric vehicles.
True.
Right. So based on that, there are certain numbers projected
Hmm.
for the year 2030. It's so many vehicles which are electric vehicles have to be sold,
True.
which can be a mix of passenger vehicles, I mean the two-wheeler, four-wheelers, and so on, right?
Right.
So based on that, certain estimations can be made of how much power will be consumed by these electric vehicles.
Absolutely. I think the base scenarios by Niti Aayog and government earlier take us to nearly like a 80% adoption in passenger car vehicles as well. Two-wheeler, three-wheeler is to be expected
Much
to be more aggressive, and we have seen that offtake already in these two segments, and nearly 40% conversion in the buses segment.
Okay.
These are the identified. Again, not much on the commercial vehicle side, but just the buses is like an established use case so far. That takes us to another somewhere around 100 to 120 terawatt hour of
Okay.
additional consumption that should come just from
From
the
the
electric
electric
vehicles.
vehicles.
Yeah. So that is one new power demand that
Right.
is not built in any estimated numbers so far
True.
is going to come.
True.
Interesting space is, I think, data centers,
Right.
which is a very good growth story, and people are excited about
Absolutely.
finding investment opportunity. But tell us like how power is an interesting way to play data center story.
Yeah, so everyone is excited about power, and maybe I'll mention the name of a stock, but
Right.
because it's everyone knows about it,
Right.
but it's not a buy, sell, hold, or anything to do with investing. But I mean, Nvidia is
Yeah.
the talk of the town, right, worldwide. So that stock is gone up because of the huge demand its
Yeah.
GPUs are seeing
True.
on the back of AI calculation requirements, right?
Right.
So because of AI, Nvidia is driving the demand, and now combine that with the fact that in India the law says that Indian data has to be stored in India,
Right.
and India generates one of the largest amounts of data worldwide.
Right.
Now all of that data by law will have to be stored in India, which means the analytics and AI on top of it also will have to be carried out in India, right? Which means the AI chip demand, which right now the global demand is what is driving Nvidia, right? The same demand will also happen, and of course, we don't care about Nvidia. I mean, there would be other companies which will be producing eventually, but all of that kind of AI GPUs will be required in the Indian data centers.
True.
And a typical Nvidia AI chip consumes as much power in a year as a typical US household consumes. That's a huge number, right?
True.
Just now we discussed that our per capita is not even close to the global average, which includes developed and undeveloped countries. Now we're talking of a developed country, and that is the kind of one chip is going to have. And if we have so much data and we have to do so much AI within that, in the data centers in India, then imagine the kind of power demand that will drive. Okay, so that's just a very, very large number.
So our very, like, I would say, conservative estimates put that number around 150 terawatt hour. So in essence, it is going to be the largest consumer of power in India. Like,
Absolutely.
By next
and this is
few
a very conservative number.
Right.
I think the number we have taken, this conservative number, is because the kind of capex required
is
for the amount of real, if you estimate the real demand for data centers,
that capex
is probably 5 times what we have assumed. And it's a very large number, and it's probably touching close to trillions of dollars, or $0.5 trillion or something in that range.
So right now we have only like announced plans of around roughly $30 billion of investment, which will take our data center capacity. Right now we have just about 1 gigawatt of capacity, which will be estimated to be somewhere around 15 to 20 gigawatts. But that itself will take something like a $30 billion investment.
Right.
So
we're keeping away from very large numbers right now. but that itself is adding about 3-4% or 5%
5% to the
to the
total
total demand.
demand, and another, let's say, 4 to 5% from EV. So
Right.
another 10-12% kind of a growth demand is going
Coming
to come
from,
from fresh
right.
consumers. Right?
Now, if imagine that really what is required happens, then this is way beyond
Way beyond.
imagination, right?
True, true. So the demand is there. I think we have fairly established that in the sense, the broad
Yes.
line numbers. But uh, what is interesting is that that the capacity, the investments in capacity of power generation is also moving in sync. There is a clear focus, policy focus on that side as well. We are at currently around 445 gigawatts capacity, which is expected to be around 1000 gigawatts by 2030.
2030.
The mix is going to change, obviously. Today, nearly 55-60% is coming from thermal,
Thermal.
but in future, nearly, let's say, more than a one third will come from solar and wind, maybe nearly 40 odd percent. So so effectively, whatever that 3000 terawatt or maybe higher 4000 terawatt number, if it happens to be, we will have sufficient
Power.
installed capacity to generate that kind of power. So that is moving in sync, which creates another growth opportunity for all the power generation companies, equipment
Absolutely.
manufacturers, suppliers, and the
Financing.
financing companies, the grids, the trading platforms, and so on, because of the large volumes that
Right.
you are talking about,
Right.
right? So obviously, this will all need a lot of capital investments,
Mm-hmm.
right? So
True.
the national infrastructure pipeline put something like 24 lakh crore of investment. The next 5 year horizon is somewhere. The government has just put out a number around 17 lakh crores. By 2027 or 28, they'll have to invest that much amount
In
in
power.
generating power capacity.
Mm-hmm.
So obviously there are a lot of demand
Mm-hmm.
for financing is also there,
True.
and there are specialist financing companies other than the
Absolutely.
banks, right?
Absolutely.
So the growth outlook for these companies as well is quite strong, because
True.
obviously there is demand, but interestingly they are at one of the best, let's say, asset quality mix. At the
True.
NPAs are lower, decadal lows.
Yes.
They have a huge capacity to lend
To
fresh
land.
capital.
Yes. Absolutely.
So I think that's a good part, that the whole equation, like there's a demand, there is capacity, there is being planned out, then there is financing which is available from the pure play players as well. Uh, so so I think that's what broadly is important. What the other interesting things are happening is that in terms of the distribution transmission losses, we have seen a significant improvement in terms of what is the power generated and what is actually consumed.
Mm-hmm.
So we are going on a good trajectory there. Plus there are interesting things happening on, let's say, grid connectivity, where because a lot of renewable energy especially is being produced and now in areas which are not well connected with the grid.
Mm-hmm.
So government has recently come out with quite a few announcements where tens of thousands of crores are being spent to improve grid connectivity, so that more and more power is available and supplied wherever it is required. So those are the thing. I think power storage is another
Correct.
interesting area, right?
Correct.
So
And then it kind of segues into the green hydrogen
absolutely,
kind of
absolutely.
a scenario.
So put together, there are multiple additional growth vectors,
True.
sub growth vectors to the power, and we find this space quite attractive.
So let's talk about valuations,
Right.
right? So opportunity is huge, capacity is there
Right.
to either invest more and generate more power,
Right.
or to lend more to companies which want to borrow for this purpose. So all that wise, capacity is there,
True.
demand is there.
True.
Now what about valuations? Because if the valuations are not right, doesn't make it's not
Sure.
an investment case, right?
Sure. So see, for some of the financing companies, play, the valuation mix is quite attractive, because I think there is still some overhang in terms of the past NPA cycle, the toxic assets that these
So
companies
sentiment
right
is
is still
still negative, and
negative.
that is
Negative.
helping the
Uh,
low valuations.
exactly.
Hmm.
In fact, in one of the new, like a power specific new IPO that came for of an NBFC, we have not seen that bad sentiment, because
Correct.
market started
So
with a fresh slate, so they just got
and the
excited.
and the word renewable was there.
Renewable was there, right?
So even though the old guys might be doing more
Doing it,
renewable,
right, right.
then
So, so on that side, it is good. On the generator and other names, I think still some bit like the private players on certain cases might be slightly more closer to their fair value,
true.
but the other generators are still quite attractively priced.
So I think the mistake market is doing is probably not looking at the capital work in progress,
True,
right? Many
true.
of these companies have huge
Huge
capital
capacity.
work in progress,
Right, right.
so which is still work in progress. So the ROEs are depressed,
Right,
the earnings are not showing it yet,
correct,
right?
right,
And so you are applying a PE multiple to existing earnings
correct,
and saying, oh, it's already compared to historical, it's expensive.
correct.
Although compared to rest of the market, even that is cheap.
Sure. Plus, you have a overhang of slow growth in the last, let's say, 2 decades, and so
Right. So you're just saying that it will
it will
continue
continue to grow
growing
at that
slowly.
rate, right?
While if you account for this capital work in progress, which is probably in many cases nearly 50% of the
Or more, right?
of the total
Total
capital.
operating.
So if that comes into play, that
Right.
means the revenues and earnings should at least double, or maybe even more.
Right.
Right.
Absolutely.
So if that happens, what all the PE ratios, everything will look extremely cheap. ROE will look extremely high,
True.
and the growth rate suddenly will look very, very high.
Right.
And that is when a re-rating hopefully will happen.
Correct.
But till then, there is, I think,
A lot of
a great opportunity.
True.
Yeah.
Great. Great. So, if you have any queries or any doubts or any questions related to any of our growth factors, we are happy to take them. But stay tuned for such interesting discussion. Thank you so much for joining.
Thank you.
So always keep in mind that investment in securities market are subject to market risks. Read all the related documents carefully before investing. And also that registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors.